No one is immune to deposit loss, not even the most experienced trader. However, to reduce the likelihood of such an outcome, it is crucial to strictly adhere to the chosen strategy, follow money management rules, and carefully select a broker. These recommendations apply not only to the Forex market. Trading binary options, despite its visual simplicity, also requires adherence to mandatory guidelines. Otherwise, the probability of losses significantly increases. In this video, I present to you a simple and accessible binary options trading strategy called Zenith. By precisely following all the conditions outlined in it, you can achieve a decent profit in as little as 10 minutes. Hello everyone, I'm Mary and I have extensive trading experience that I want to share with others. As a result, I decided to create my own YouTube channel. If you're interested in joining me for trading sessions and receiving signals, feel free to subscribe to my Telegram channel. You can find the link in the description. In today's session, I will demonstrate several successful trades. If you find it valuable, consider joining my YouTube and Telegram channels where I regularly share accurate entry signals. Zenith is an indicator-based trading tactic that utilizes two popular technical analysis tools, the Stochastic indicator and the envelope, with specific settings. The essence of the Zenith strategy is the use of two indicators, Stochastic and envelope. Employing both indicators to determine entry and exit points makes the Zenith strategy one of the most effective in trading. You receive two signals before opening the trade. The strategy involves using two indicators which need to be activated on the price chart. These are Stochastic with parameters 5.3.3 and envelope with a deviation value of 1.0. It is not recommended to use other technical analysis tools to avoid obtaining the opposite effect. Instead of confirming trading signals, additional tools can blur the possibilities of the Zenith method, reducing its effectiveness. While specifically use Stochastic and envelope. The envelope indicator falls into the category of trend-following indicators. It can be seen as an improved version of the Bollinger Bands. According to the developers of the indicator, it provides ideal inputs for trading currency pairs. The Stochastic indicator belongs to the category of oscillators. It is based on two moving averages, therefore, the indicator helps traders identify when an asset is overbought or on oversold territory. In the Stochastic indicator window, the moment when the moving averages cross is noted, and this serves as a signal for the start of a corrective move or a trend reversal. Traders need to understand the basics of technical analysis and be able to work with key lines and local levels. The Zenith strategy will be effective only when you base your forecast on both of the above-mentioned tools. Trying to find an entry point based solely on envelope or solely on Stochastic is not recommended. Which assets are suitable for this strategy? Experts recommend selecting highly liquid currency pairs and precious metals. The most liquid currency pairs include Euro and USD, Australian dollar and USD, British pound and USD, USD with Canadian dollar, USD with Czech franc, and USD with Japanese yen. Applying the Zenith strategy to other trading pairs may result in lower effectiveness. Set the price chart period to M3 in the trading terminal. Envelope indicator. The main task of this technical analysis tool is to determine the upper and lower boundaries of the price range. The indicator uses two moving averages forming a semblance of envelopes on the chart. The deviation value determines how much one envelope is shifted in comparison to the other. SMA, simple moving average. The envelope indicator takes into account precisely the simple type of moving average in its calculations. The envelope is a standard indicator, so it is included in the functionality of MT4 and MT5 trading platforms. The default period value is set at 14. Change it to 20 and set deviation to 0.1. Leave the other settings unchanged. The envelope indicator helps traders monitor the trend. The moving averages smooth out the price fluctuations and show the current market situation. The envelope tool allows you to see the direction of the bands to identify whether we're dealing with an uptrend or a downtrend. Stochastic indicator. Now that we have covered the peculiarities of setting up the envelope indicator, let's move on to the second element of the Zenith strategy, the stochastic oscillator. The stochastic oscillator was developed by George Lane, the president of Investment Educators Incorporated. The purpose of the stochastic indicator is to identify price momentum. Lane noted that momentum changes before the price, and this indicator allows you to forecast how the asset's price will change in the near future. The formula of the stochastic oscillator is calculated as the ratio between the closing price and the price range over the selected period. The indicator is determined as a percentage, ranging from 0 to 100%. Generally, George Lane recommended using stochastic on daily and weekly charts, selecting a period value between 9 and 21. However, the trader himself often applied the tool on a 3-minute time frame. In trading platforms, the default value for stochastic is set as 533. These settings are suitable and should not be changed. When the oscillator is above 80%, it is an overbought zone, indicating a high probability of a bearish trend reversal. When the stochastic percentage is 20% or below, the market is in the oversold condition, suggesting a high probability of bullish trend reversal. Let's test how our Zenith strategy performs on the real chart. It's quite a straightforward strategy, and I believe I will quickly find a suitable situation for it. Just a reminder, for this strategy to work, we need either a trend or a relatively calm price movement without strong impulsive price changes. Ideally, I need a highly stable market without extensive impulsiveness and unpredictability. Using this strategy, I will open trades with a 6-candle expiration time, meaning 6 minutes. The situation here is generally good, but I won't enter on this chart for now. I'll leave it for later. The Zenith strategy involves using only 2 indicators. The first one is stochastic with settings 533 and the envelope indicator with a deviation 0.1. As I mentioned, I will open trades with a 6-candle expiration time. Ideally, it's best to open trades for 5-6 candles because this strategy works well on smaller time frames. On larger time frames or with longer expiration times, it performs slightly worse. For example, if you analyze a 5-minute chart, you should open a trade for no more than 30 minutes. If you are trading on a 10-minute time frame, you should enter for an hour, no longer than 6 candles of your time frame. By the way, there is an interesting situation on US dollar and Canadian dollar, but let's skip it for now as well. Overall, it's a great situation and I have a good chance to profit from it. Alright, I'll now specifically look for a situation to use Zenith. Here is something interesting caught my eye. The stochastic indicator went below the 0 level, more precisely below the halfway point, that is the level 50, and the price almost reached the lower envelope boundary. Overall, I think I can open an upward trade for 6 minutes. The trade amount is $1,000. Now, when everything is ready, let me remind you how the Zenith strategy works. According to this strategy, we should buy when the price approaches the lower boundary of the envelope channel and the stochastic lines intersect below the level 50. This is the standard entry method, and it works well for trades lasting 5-6 bars. Ideally, it's better for the stochastic lines to cross upwards near the level 20. This is a much stronger signal than the price has reached its minimum and will start to rise. For downward trades, the conditions are reversed. The price should approach the upper envelope boundary, and the blue stochastic line should cross the red stochastic line above the level 50, even better if it's above 80 actually. The higher the intersection, the better. Ideally, the intersection should occur in the overbought zone. This means that the price has reached an extreme point and the trade under such conditions will be more confident. Currently, there was a sharp downward movement, but there is nothing to worry about. The price has already returned to my entry level and I still have enough time. Moreover, judging by the price movement, it might skyrocket or, as crypto traders say, go to the moon. There are 4 minutes left until the trade expires, so let's wait for the result. So I was right, and the price indeed skyrocketed. After the downward envelope breakout, the price reacted and surged significantly. Let's see how it looks on the larger chart. I've earned $890 in profit, and I'm very pleased with it. I sincerely appreciate your time and interest in watching this video. If you enjoyed it, I would greatly appreciate your support by giving it a thumbs up. I also encourage you to subscribe to my YouTube channel and join my Telegram channel to stay informed about my future content. By becoming a part of our community, we can build a friendship and engage in more discussion. Thank you for your support. Looking forward to see you again. Goodbye.